Think banks really care about your credit score? Honestly, not the way you think they do. They're judging you based on things most people never even realize. If you've ever been denied for a business loan, even when your score looked decent, you're not alone. In this video, I want to walk you through why that happens. And most importantly, what you can do about it. Because here's the thing, your credit score is just a number. What really matters is the story your credit report tells behind that number. So today, I'm breaking down the 5 key things that banks are actually looking at. And these are the real reasons people get denied or approved. The crazy part, most of them are hiding in plain sight. And if just one of them is off, yeah, lenders can drop your application faster than a bad Tinder date with a maxed out credit card. These are the 5 factors that really matter and that you can actually control. And once you understand how they work, you'll stop guessing and start getting approvals with confidence. And if you stay with me to the end, I've got a bonus for you, a method that helped boost my score in under a week. No hype, no gimmicks, just something I wish I had known sooner. But before we get into it, let's clear something up. Most people obsessed over their credit score. That 3-digit number feels like everything. But banks, they don't see the score. They look at your full credit report, the patterns, the habits, the way you manage credit day to day. And here's what surprises most people. All of that information is right in front of you. It's not some hidden secret. It's just never explained in a way that makes sense. You're watching your score. Meanwhile, lenders are analyzing how you use your credit, when you pay, how much you rely on it. And the truth is, they don't expect you to already know what they think. So today, we're changing that. I want to help you see your credit report the way a bank sees it. Because once you do, you'll know exactly how to build a profile that gets approved. And finally, get access to the business funding you need. Let's start with the first one, payment history. This makes up 35% of your score, and it's probably the most misunderstood. One late payment, just one, can drop your score by over 100 points. And it sticks around for up to 7 years. Lenders don't care about the reason you were late. They don't ask for context. They just see risk. I know that firsthand. There was a time when I had tried to explain why I had fallen behind. My daughter needed emergency medical treatment for a heart condition. I wasn't looking for a handout. I just needed help. But all I got was, I'm sorry, there's nothing we can do. That's when it hit me. If your credit report doesn't check all their boxes, your story doesn't matter. So I would recommend putting your payments on auto pay. Now's the time to do it. Set it, forget it, and protect your payment history. Next up, credit utilization. This makes up 30% of your score. It's not just whether you pay your cards off, it's how much of your limit you're using when they report to the bureaus. Here's an example. If you got a $10,000 limit and you're using $4,000, that's 40%. And that's way too high in their eyes. Even if you pay it off every month, a high reported balance makes it look like you're living on credit. You know what helped me? I started making 2 payments a month to keep that balance low before it hit my report. Keep your utilization under 10% and you'll start to see the difference pretty quickly. But understand that is an average over all the accounts. So third is your length of history. This one is 15% of your score. It's not just about your oldest account, it's about the average age of all of your accounts. Open a bunch of new cards or close an old one and your average age drops. That's a hit to your score. So if you've got older accounts, even ones you don't use, keep them open. Put a small recurring charge on them and pay it off automatically. Let time work in your favor. Fourth, credit mix. This makes up 10% of your score. Banks don't just want to see that you can use credit. They want to see you can manage different types of credit. Credit cards, auto loans, personal loans, mortgages. It shows you can handle multiple responsibilities. If your whole profile was just credit cards, you might not seem as financially well-rounded. One simple fix is to add a small installment loan, manage it well, and it shows up as a positive mark. I did that, paid it off early, my score went up. And finally, number 5, credit inquiries. It's about 10% of your score also. Every time you apply for credit, it's a hard inquiry and it hits your report. You stack up too many of those in a short time and it looks like you're in trouble or desperate, even if you're not. I learned this the hard way. Back when I had a 540 credit score, I was applying everywhere, hoping somebody would give me something. But every time I applied, it actually made myself look worse and I kept getting denials and my score tanked. When I stopped chasing approvals and started managing my profile intentionally, everything changed. Now I maintain a 814 credit score when years before my credit was at a 540 and I couldn't increase the score and kept getting denied everywhere. So now instead of me chasing banks, they chase me. Now zoom out for a second. Now you're not guessing anymore. You're not just watching your score go up and down. You're building a profile that actually works. And so imagine this. You apply for funding and you're not anxious about the outcome. And you get access to the capital that you really need. Imagine, what would you do with that? You can grow your business on your terms. You're not held back by old habits or missing knowledge. Now you're informed and you know what's going on. You're in control. Credit is a powerful thing. And when you learn what makes up your credit score and what bankers are looking for, you'll automatically understand the formula and the recipe of getting the credit that you're looking for. All of these components that make up your score are vitally important. And as I mentioned earlier, if you miss one of them, your score will tank. They all have to be in check. Now, there are cases and situations where, like in mine, where there was something off in that formula and I couldn't seem to get ahead to fix it. But what you could do here at that point is you can take a look at where the issue is and where the problem lies, and you can take the actions to fix it. In this channel, I'm going to go over these exact things. I'm going to be coming up with topics that are surrounded on how to have the perfect credit profile so that you can get the funding that you're looking for. It all starts with this foundational piece, your personal credit. Because as you know, there's no way around providing your credit information. So as we get together and talk more about this subject and each one in specifics, I'm going to share with you the tweaks and hacks so that you can elevate your credit score quickly, optimize your credit profile so that you can get the attention from the creditors that you're looking for. And just like I promised, if you click the link below, I'm going to share with you my free guide on removing credit inquiries to boost your score in 7 days or less. Everything else looks great. Those inquiries can silently remove those denials that you've been getting. This method helped me boost my score in just 7 days. But there is a situation where, but sometimes it's not just credit inquiries. There are other things. And if you need help with your credit or anything at all pertaining to what we're talking about today, or you're interested in business funding, click the link below and get in contact with my team. And we'll personally help you in identifying and addressing those areas that aren't allowing you to get funding. Thank you for tuning in. And if you're looking for more videos just like this, it's going to help you get the funding and credit that you're looking for, hit follow and hit like. Follow me for more videos just like this, where I'm going to help you unpack the secret formula on how to get funding each and every time predictably. And if you found value in this video, smash the like button and share it with others so that we can expand our knowledge and how we can obtain funding so we can scale and grow our businesses.